Hello and welcome to our preview of the ECB meeting. Last month we saw President Draghi keep rates on hold. However, in his press conference he went on to say that they were going to look through recent volatility in Greece and China. Now, since that meeting we have seen a situation in Greece die down. However, we have seen heightened volatility as a result of the situation in China, which culminated in last week's Black Monday. Since Black Monday, we have seen comments from Bank of England's Carney suggesting he will continue to look through volatility, so it will be of interest to see whether Draghi repeats similar rhetoric. In terms of the rate decision itself this month, all surveyed analysts are expecting the rates to be kept on hold. Instead, market analysis will be focused on inflation. Given the recent volatility in China, we have seen strength go through the euro, given its use as a funding currency. This is combined with recent low energy prices to keep inflation low, with the August reading coming in at 0.2%, which is substantially lower than the ECB's mandated 2%. It is worth noting that the overnight one-year EONIA rate, that is still in negative territory, while the five-year forward interest swap rate, that is at similar levels seen as to when ECB introduced QE. As such, it will be interesting to see whether President Draghi continues to be downbeat on inflation, and if so, then whether there's any chance of an increase to the current QE programme. Analysts at Barclays and Goldman Sachs suggest that the size of QE could be increased either in terms of size or in terms of durability. However, they note that it is more likely to happen at the end of the year. Instead, what we'll be looking at for this month is dovish tone from Draghi. If he is downbeat, you could see a market reaction suggesting that asset purchases are more likely, and as such you could see an increase in fixed income as well as equities, while you could see a weakening of the euro. However, it's worth bearing in mind that ECB's Constancio came out in the last week and has said the central bank wants to avoid a knee-jerk reaction. If there is therefore a hawkish surprise and Draghi is less downbeat on inflation or on the economy, you could see the opposite reaction with a strengthening of the euro and a weakening in both fixed income and equity markets. That's all from me. Good luck.